We're just going to break in. Jim Chalmers, the Treasurer.
Was 1% and 3.8% through the year. Trim mean inflation was 0.8% and 3.9% through the year to June 2024. This means that underlying inflation in our economy continues to go down. Underlying inflation is going down in annual terms and in quarterly terms, and this is the sixth consecutive quarter that we've seen underlying inflation in our economy moderate, and we welcome that development. The headline inflation of 3.8% is consistent with the Reserve Bank's forecasts for the June quarter as well. Non-tradable inflation, which some call homegrown inflation, actually halved in the quarter in this data, and the monthly inflation indicator is also down in June. So what this means is that we are seeing underlying inflation in our economy moderate. We would like it to moderate further and faster, but this is the sixth consecutive quarter that underlying inflation has moderated, and it is also moderating in quarterly and annual terms, and we welcome that. As I said, headline inflation is consistent with the Reserve Bank. Non-tradable inflation has halved in the quarter, and the monthly indicator is also down. Inflation in our economy is sticky and stubborn, but it is much, much lower than what we inherited when we came to office. Inflation in our economy is more persistent than any of us would like, but it is much lower than the more than 6% inflation that we inherited when we were elected a little over 2 years ago. When we came to office, inflation had a 6 in front of it, and now it has a 3 in front of it. We've seen those 6 consecutive quarters of lower underlying inflation, and that's a really important development as well. We also know from experience around the world that inflation, headline inflation, rarely moderates in a straight line. We see it zig and zag in other economies, and we've seen some element of that in the headline figure today. But as I said, the underlying figure continues to moderate, and that's a good thing. We also know that the government's policies are helping in the fight against inflation, not hampering the fight against inflation. We know from the Reserve Bank Governor that the 2 surpluses that we've handed down in our first 2 years in office are helping in the fight against inflation. By turning those big Liberal deficits into big Labor surpluses, we are helping in the fight against inflation. But it's also important how we have designed the substantial and meaningful but responsible cost of living relief that's rolling out right now. Every taxpayer is getting a tax cut, every household is getting energy bill relief, there's cheaper medicines, and there's more rent assistance on the way as well. And we know from the ABS today that our cost of living policies are taking the edge off these cost of living pressures rather than adding to them. And the ABS has once again been incredibly clear about the positive and meaningful impact of our cost of living policies. The ABS has made it clear today that without our policies, inflation would be another 0.5% higher than what we saw in these June figures. And we also expect via the Treasury forecast that our cost of living policies will take another 0.5% off in the year to come.